Hey dear all, welcome to my presentation today. This presentation contains three tasks. So first, first task is hotel company and hotel property analyze. And task 2 is general manager's balance scoring. And task 3 is analyze of hotel performance. So in task 1, it will provide a financial analysis of for the allocated group, a hotel group as Marriott International based on its annual report for 2021. So Marriott International is a multi-tensional hotel group, which has more than 30 famous hoteling brands as Marriott, Grand Residence, Ritz-Carlton, and Westin, and so on, to cover various levels of marketing segments. Its strategy goal is to make Marriott as an everyday part of the members' lives. So for the financial years end 2021, the hotel group has consolidated total revenue of 30,857 millions. The net profit after tax as 1,099 millions, and the return of asset is 4.3%. Comparability, the group has a better performance in financial year 2021 comparing to the previous year, which is reflected by the higher value in revenue, net profit, and the ROA due to the recovery of the global tourism after COVID-19 impacts. So, and for the financial years and 2021, the company has a building property balance of 985 million. Its property are mainly continued by the building and the faculties of hoteling and recreation across the world. At the year end 2021, the group has had 2007 company operates properties with 568,864 rooms under its direct operation control. And it also has had 5,880 franchise and licensed property within within over 200,000 rooms under the operation from the franchising and licensing partners. In short, from the proportion of the rooms, it is about 39% of the room resource under direct management, and 61% of the room resource under French and licensed partners management. So for Marriott, Marriott International, and the other similar hoteling groups, uh, their cost their cost structures have a high proportion of fixed costs like the property depreciation or staff wage, but with a low proportion of variable cost. Because of that, the group has high sensitivity of operating profit by the by the sales volatility. Specifically, in a weekly basis, the hotel might have a higher sales amount in weekend with more customer living in, and thus having a higher operating profit. Such volatility also reflects in the seasonal pattern, by which the vacation months like July or December might include more sales and profit than that in other months. Moreover, the hotel group's sales and operating costs might also be affected by special events, like the outbreak of COVID-19 pandemic in 1990 has resulted in the lower sales and the profit of Marriott International Group than that in year 2021. So let's talk about task 2. In task 2, in order to align the hotel general manager's performance with the part with the parent company and its brand strategy direction to make Marriott as an everyday part of members' lives. we propose the following balance scorecard. For the financial dimension, we have two strategic objectives as to increase the sales and to increase the operating profit. To realize these objectives, we have two integrated. One is to expand the loyalty customer population, by which we have two KPIs as the percentage of loyalty clients who have more than 3 times to living in Marriott Hotel a year, and the average revenue per room. Another integrated is to improve the business efficiency, by which we have two KPIs as return on asset and the market share in the local hoteling market. For the customer-related dimension, we have two strategic objectives as to improve the customer satisfactory and to avoid the negative impression to client. To release the objective, we have two initiatives. One is to maintain the customer satisfactory score above the good level, by which we have full-scale two KPIs as the mean as the mean satisfactory score of customer survey, and the percentage of loyalty clients who have more than 3 times to living in Marriott Hotel a year. Another initiative is to speedily and properly respond the client claim, by which we have to fulfill two KPIs as the mean response times for the customer claim and the mean satisfactory score of the customer claim evaluation. So for the employee related dimension, we have two strategic objectives as to improve the employee retention rate and to improve the service professionalism of employee. To realize this objective, we have two initiatives. One is to retain the experienced employees, by which we have to fulfill two KPIs as the average served years for the staff population and the mean satisfactory score for the employee survey. Another initiative is to conduct necessary training, by which we have fulfilled two KPIs as mean training hour per staff and the percentage of training expense versus the sales. So for the organizational process dimension, we have two strategic objectives as to improve the new hotel experience and to improve the awareness of the hotel brand. To realize this objective, we have two innovated. One is to increase the new product development, by which we have fulfilled two KPIs as the number of new product each year and the sales percentage of new product to wholesales. Another initiative is to make the hotel brand more known by target customers, by which we have fulfilled two KPIs as the local media exposure frequency and the number of friends in social media account. So let's talk about task 3. In this task, we will use the ratio analysis to evaluate the financial performance and the position for assigned hotel property as 4 points by Sheldon Singapore. So in the hoteling business, people are commonly use sum ratio and metric to assess the business performance. For example, the ratio for profitability, for turnover, and the financial stability from common accounting analysis will also be applicable in the hoteling business. Besides, there might also be some unique assessment metric for the hotel, like average room rate, average occupancy rate, and revenue per available room, and so on. So this is a calculation the ratio and Yeah, and with the above ratio, we can conduct a few analyses to compare its performance over the last 2-year period. For the profitability and efficiency, it is found that the target property has an improved profitability and efficiency trend in the last 2 years, which is reflected by larger values in profitability ratio and the higher turnover ratio. For example, the net profit margin ratio has increased from minus to 9.55% in 2020 to 7.7% in 2021. and the account and the and the accounts receivable turnover ratio has increased from 2.62 in 2020 to 5.13 in 2021. The major reason behind such trend is the rebound of sales after tourism recovery from the COVID-19 impact. So for the short-term liquidity, the target property has an improved liquidity trend in the last 2 years, which is reflected by the larger value in the related liquidity ratios. For example, the current ratio has increased from 1.53 in 2020 to 2.85 in 2021. So due to the improved profitability has made hotel to earn more liquidity assets and pay back more current liability. So for the long-term financial stability, the target property has a higher financial leveraging and gearing trend in the last 2 years. So which is reflected by the higher debt ratio values. For example, the debt and asset ratio has increased from 40.09% in 2020 to 20.47% in 2021 due to the aggressive debt financing strategy from the management to maximize the equity return with better confidence on hotel's future performance. So yeah, that's all. Thank you. So this is my reference. Thank you very much.